how do we avoid fake outs? That is like the number one thing that a lot of people fall into. This is a huge trap. Whatever trade you take, maybe a lot of you like to take breakout trades, but there's a time and place for when you take a breakout trade. When you're looking at smaller time frames, maybe you use the 5-minute time frame. I personally use the 2-minute time frame, but besides the point, whatever level you look at, there's going to be some kind of fake outs that you see. For example, this is a previous movement, and say that you're taking a breakout of a certain level. That's like something common. So say we have a previous day high, we have that high, and maybe this day you're looking for a breakout trade. You have a level there, and what you're looking for is, hey, if price breaks that level, I am going to get in that trade for calls, because you're looking at a breakout to the upside. You can see, of course, this day price ended up falling down, but at the point in time, you don't always know that. This is all hindsight. Maybe after the fact you say, oh, I should not have entered that trade. But at the time, you don't always know it's going to trend that huge. For this example itself, we're just going to see, hey, how do we avoid this fake breakout? A lot of times you're looking for other movements where, hey, maybe this is another fake out, but price went much higher. How do you avoid that? It's all going to be really different. So the way I avoid a lot of fake outs is I have a very specific strategy. I'm usually looking for a pullback or a break and retest of a level. If I don't see that, then I don't trade. So I don't personally do breakout trades just because I've tried that before. I've tried every strategy, and it just doesn't work out for me over time. Based on like the consistency of the strategy, if I take a breakout trade, maybe 50% it goes, but the other 50% it fakes out. So here, if you're trying to enter a trade, it is also an area where it is a resistance. So you just have to keep that in mind. Any kind of breakout level that you're looking to take a breakout trade in, that is a support resistance area. It is a key level. So what happens at these levels is one of two things happen. Price is either going to break it, or if it's this strong, price is going to reject it and reverse away. So the best thing you can do is to wait for proper confirmation. If price is not even close above a level, then likely it's maybe going to wick at it. A wick is showing you it's selling off here based on where it's at. So I would wait and see whether you get a close of the candle. If you're impatient and you don't want to wait for a close, then based on like how you like to trade, you may have to look at other confluences. But the number one thing you can do is look for a close of the candle. So if it is a 5-minute time frame, if it's a 2-minute time frame, even if you're doing a swing trade, you can wait for a close of that whatever time frame candlestick. If it closes, that is showing a strong breakout. If price is showing a truly strong breakout, it should not wick and then reverse. So that's like the first thing to note. Another thing is that sometimes we do get a close above that level. So then now what? Let's go to an example. Okay, here. So this is a breakout trade, but it did end up going higher. Some of them work, some of them don't. We'll just give you this example. If you have a previous day high right there, and then you do see that pre-market high is actually not too far off. So you have two levels. So basically it kind of adds as a strong resistance since price is rejecting it multiple times. Then you kind of zoom into this area. What we do see is that price wicked first. The first candle was a wick. Depending on whether you take a trade like right at open, maybe you take this, maybe you don't, but this is something you avoid. It didn't close. Next candle, it pushes really strong. Sometimes it holds there, sometimes it wicks. But another thing, if you're seeing that price is holding in that area for a very extended period of time, this is a 5-minute time frame, so it takes 5 minutes to move. Maybe at the 4-minute mark, you see that price is still holding in the area. It's not moving at all. That could also be another indication, because price is basically holding there and may not close just yet, but we're kind of like over that 50% mark of that candle moving. So as long as it's like 75%, 50%, depending on like how you're comfortable trading it, if the movement is holding above that level for an extended period, that could also give you confidence that price will likely have a nice breakout follow through. Another confirmation is to look at like market structure. So like you could turn this on and see, hey, based on the line, we see a little bit of structure. It's a pullback, or just you see a lot of wicks either ways. So that could also tell you, hey, it's coming down, but it's not able to close lower. So the red candlestick didn't even push and all that. So it had like strength higher. that could be confirmation of a nice breakout. So your entry's a little higher, but you avoid any kind of wick at the area. So that's another thing. Look for confirmation of a pullback, a break and retest, see if whether the wicks are pushing higher. Another thing, if we kind of look, maybe, let's see, a lot of fake outs. You just get a lot of fake outs. Any kind of level you draw, that's a previous high level. You see you get another fake out. Maybe we can see the bottom, maybe down here, you have a pre-market low, faked out. You don't see a close there. So just wait for a close to see what happens. Another thing, if you are looking, maybe it's not these pre-market levels you're looking for. Maybe you're looking at a high of day breakout. That's like something I used to trade. I used to see, hey, does the high of day, is it breaking out? I'm going to trade a high day breakout. And then for me, sometimes it worked, sometimes it didn't. But again, it's kind of your choice whether, are you okay with the strategy because it has a higher success rate? Whether you have a bit different leverage, you have a different way of managing the trade, you can still be profitable, but it's all up to you. It's your trading style. So if you're not comfortable with that, you don't want to lose as much, then you wait for different setups. So another thing, let's see, a high of day breakout. We go kind of to the left. All of these days are so messy. This market is really messy. So either ways, this is not something I would trade anyways, but we're just going to have a nice example here. All right, here, let's see this day right there. So pretend, you did your work, you did the preparation ahead of time. And one of it is your top-down analysis of the charting process. You can check out other videos where I show you my charting process. But after all that's done, maybe it looks good. Maybe you want to take Apple, and then you're looking for a breakout trade. So then say you have this choppy area here, right? You're taught not to trade inside a chop, or maybe you like to trade inside it, whatever the case. If you're looking at a breakout, maybe it's a high of day breakout. We have this white line that signals to us a high of day. Maybe you're waiting for that level to break first and then you want to take a trade. What we can see after this breakout, price didn't go anywhere. So either ways, we did have a close above that level. So this level was created. We have a close above that level and you think, okay, based on it closing, I'm going to enter on the next candle as it breaks that high. Maybe you enter on this green candle and you enter for calls. What do we see after that? Price just goes really choppy. And then you end up, maybe staying the trade, hoping that price may go higher. It keeps going based on your time decay, your contract. It's just not worth it. You get break even or it's red. So how do we avoid this mess? Because, this is all hindsight. I'm just saying, you can see this, that it didn't go anywhere. But at the time, you never really know the potential of the trade. For all we know, at this point in time, based on this entry, price could have trended. It could have gone really far, had a really good day, but on other days, it's not going to do that. One thing I will note is that when you take any kind of high of day breakout, if it is taking this long for that high of day to break, it's really choppy in between. What we're seeing is that market opened at 9:30 a.m. This breakout happened at 11:30, around there. So 2 hours. Basically, that whole morning, it chopped around for 2 hours. If price is this choppy for such an extended period of time, it's already showing us that price is weak. Price may end up being weak later in the day. That's what I usually see. If price is this weak for such an extended period, then usually after any kind of breakout, there's not enough strength to break out and fully go. So when I see this, I am not taking any kind of breakout trade because it should not take this long for that high of day to break. If this was a high of day and it truly was a nice, strong movement, strong day, price should have made this high of day, maybe pulled back or something, and then pushed up higher. It took a whole, over an hour just to break that level. I would not trade this if price is weak. If price is weak on any given day, and it looks like that, all your candlesticks have a lot of wicks above it, below it, there's no proper structure, levels aren't breaking, that is a sign that any breakout you take later on, there's usually a lower success rate of it really pushing. So that's something where, it goes with the rule of closing above the level, but it doesn't go because the ticker is weak. So that's another thing to watch for. All this stuff, I'm able to know this because it's based on a lot of losses. So every loss that I take, I'm looking at, hey, why did I take this loss? Or how come sometimes the breakout trade works versus it didn't work? And it's because you look at the chart, you spend so much time, screen time when you're live trading, you're watching the charts, you just pick up on little things. So if you're not picking this up right now, that's okay. It's just like, it takes time, a lot of awareness. You see, hey, a level is breaking, how does price move? Oh, price is choppy. The wicks look like that. What does that mean? So it's just like interpretation. Another day, you can see like, okay, this moved really strong later in the day, but then you have to ask yourself, are you really gonna trade in the later half? So if you see this full trend, would you really catch this nice breakout trade of this low of day? Be practical. If you're not trading within those hours, I would honestly not even like look at that, because sometimes like these movements are kind of different from the morning movements. Maybe the strategy is different. The movement is just really different from what you usually would take. So if I'm testing anything, I would just stick to the time frame that I like, that I would actually be on the charts. So you see a lot of fake outs. There's so many fake outs. High of day, whole push here, and then that was the reversal of day. You think that price is going to break out of that high. It doesn't. It fails. Price closes above that level, goes sideways. That was the reversal. You get market structure downward. How do you prevent that? If we look to the left, hey, we have to look at the bigger picture. Oh, that's another thing. The bigger picture movement can also tell you that maybe you shouldn't trade in that area. So this is just a smaller fraction of the bigger time frame movement. So let's kind of just use this replay mode button so you get a understanding of this fake out. So this level of a fake out of high of day, it looked strong, it looked bullish. There could have been potential for price to break out of. However, okay, so we have a high of day. Let's mark that. High of day is something I like to mark. High of day, and then you have a pre-market high around there. So mark that a different color. And you can see, hey, that fake out happened at a key level anyways. So any key level is support resistance, always a potential price of either breaking out or faking out. So again, what I like to do, I like to see that level clear, and then I like to look for a break and retest or something to give me proper confirmation that price is really going. So I avoid these type of fake outs by waiting for another strategy instead of just a breakout trade. If we look at the bigger picture to just get our understanding of this fake out, here, you were expecting for price to go higher, right? So you were thinking, hey, I want to take calls. I want to take a breakout of high of day. Well, what we're seeing in this trend is that price is actually bearish. We see that price is overall going down. You know, it rejected this resistance. We have a little bit of market structure pullbacks, but essentially this was a bigger pullback here. Price was showing us a bigger bearish trend. Your entry there is an entry for calls. So it's kind of against the bigger trend. Price just pulled back. The higher probability to trade is going to be in the bearish direction. So by you knowing this bigger time frame trend, you avoid fake outs like this, because that's an area where you're fighting the trend. The bigger trend is downward. If you take calls at certain levels, you may likely get wicked out because you're trading in the completely wrong direction. You're not trading with the bigger time frame, or like you're not trading with the strength of the market. Higher probability setups are when you're going to trade with the market. Even if that morning looks bullish, it could look bullish, but then at one point it's going to reject that certain level. Then the market continues downward in the bigger trend. So what I would do is avoid any kind of bullishness here. I would only look for puts. And then usually, you know, after a really like strong rejection, you can look at market structure, look at a break and retest, and then you look for puts, and then it goes down. So all these little things really come together to help you avoid all these fake outs. There's so many different things, levels here, watch out for this, the bigger time frame movement. All these things will help you understand where price is going. Once you kind of know exactly, I'm only going to be, you know, biased in a certain direction. I'm only going to look at a different type of strategy. Maybe you don't want to trade a whole breakout trade, you're looking for something else. That will also help you avoid a lot of fake outs, because you're only looking for a very specific movement, which is higher probability than just taking that first breakout off that level.